Alrighty, good morning, traders. This is Blake. You are listening to the Face Show. Good morning, and I can't do that as well as Ryan does. Let me see if I can do it the way Ryan does. Good morning, everybody. You're listening to the Flow Show. Does that sound right, Ryan?
Good morning, everybody. Welcome to the F.A.C.E Show with your host Blake Morrow. There we go.
I'm trying, man. I'm trying my best. How you doing today, buddy?
Yeah, you're very trying, mate. I can tell you.
Well, I just for you. Well, actually, not just for you, but for Nick and Jimmy Jude, who are joining us in a little bit. I actually got ready to be on camera. I'm not going to do it right now. I'm just saying good morning, everybody. Either that, or you got to deal with my messed up hair, which it's in the morning. It's early. I mean, I get up at the
Forex. Where's my Forex Analytix cap?
We ran out of them when we got these like 8 years ago. So and we ran out of them. We gave them away to like everybody. There's at least 400 or 500 of them running around the world somewhere, but I'm sure they're just trash as all get out from 10 years ago. So that's why. Don't worry.
Collectors
They
items.
are collect. We'll have new ones. We'll have new ones soon. Don't worry. Anyway, I'm gonna get myself off of camera for now. So let's get into the markets and talk a little bit about what's happening. First of all, yesterday was a crazy day. I'm gonna come back to this chart here in a second. It was a crazy day in the markets. We had obviously a really strong showing with the jobs report, and what was interesting, Ryan, is just the lack of follow through that we saw in the dollar. I mean, that was pretty jarring, I think, for most traders to watch the dollar just rip higher, yet there was zero follow through. And those were good numbers. Could you shoot holes in any of the data that we saw yesterday?
No, not really. Not really at all. I mean, obviously, it was a big revision that we got, the annual revision, but we're used to those, and it was less than expected, so that was fine. But no, there's nothing to shoot holes in that data. But that's one good one amid 5 or 6 soft ones that we've had, double-digit ones. So I don't think the market perhaps is going to go, oh right, well, we're going to start seeing 200k every month. I think it's maybe the case of market's gone, okay, yeah, good solid numbers, but let's wait and see if this is a trend, a return to jobs growth rather than maybe just a New Year's blip.
Yeah, and so that in itself is like, you think about like how the dollar just didn't follow through to the upside. That's going to be really I think it's going to weigh on the dollar moving forward. Not necessarily right now, but that really sets us up for CPI, because now how about if CPI comes in and it's just weaker than expected? I mean, the dollar's
that's the risk. The Fed's mandate is the labour market and stable prices. So we've had the labour market and now we're getting the prices. But I think you've got to look at it how the dollar moved on the opposite side. Remember when jobs were good and we were getting triple digit numbers, and then we got the first soft one and the market went all wobble, but it didn't really start trending lower in the dollar until we got the second and then the third, and then the trend came in. So we got to look at it the same way on the opposite side. We've had one good one out of a few softer ones. It needs to do more. But CPI, we get hot CPI numbers. I think what we see then is a lessening of this jumping in to sell the dollar as quickly. I'm not saying dollar's going to recover and Dixie's going all the way back to 100, but it just might mean people are more reluctant to sell the buck as quickly as they have been, or buy other currencies as quickly as they have been versus the dollar.
Right. Okay. Hey, I'm gonna talk about a few other topics here in a second. Just regarding actually the yen. I want to go over there because the yen's getting a lot of play right now. We're starting to see a lot of people talk about the yen. I want to remind you, if you are in the Forex Analytix, you're a subscriber. We've been really harping on the yen, and I know I put in a couple patterns in play going back a few days ago. But now, and you're talking actually on Tuesday, but you're starting to see a lot of the yen get some airplay, and I want to focus really on the yen currency itself. I want to just show you. Hold on, really quick. Let me get over to the yen. Sorry, I got to find the contract. Here we go. I want to talk about the yen because we are starting to see really a base trying to be built. Now, I'm not saying that the yen can't break out to the downside, but we are starting to see, and this is you guys can kind of see it here. We're developing lower or higher lows, excuse me, on the yen contract, and there could be a lot of narratives that are built out of this. Should we break higher? But I want to note that it is a higher low in the yen overall. You get above this trend line, that's going to be really bullish. But what makes it more bullish, in my opinion, is you break above a 38% retracement, which we're really nearing here in the yen itself. Now, if you look at the dollar yen, and I'm just going to look at this in broad market kind of. I'll come back to this little teal thing here in a second, but you can see this rising trend line, and this is really going to be a deciding factor, in my opinion, regarding the yen. And that comes in just around 152. Let's say roughly, 151, 75, 152. This is going to be very much in focus, in my opinion, going into tomorrow's CPI data. So if we have soft inflation data, I would think that this dollar yen is going to be attacking this rising trend line. But before you get into that, and before you start thinking, oh shit, I should be, shorting some dollar yen right now, I'm going to show you guys one of the benefits of being, in the Forex Analytix community. This is our just general chat room, but I'm going to take you over to a side thread that I was having a conversation with. Now, I'm giving you guys this is a little freebie stuff. Don't expect this every day. But I was talking about the Swiss yen and about, I just shorted some Swiss yen about 10 pips ago. So I'll just tell you guys that. You can just go over to the trades room. You can realize that, Blake was just shorting the Swiss yen. Whoops, right here. And I didn't want to do that. But anyway, I'll go back to the general chat room so this way you guys can see the conversations that are being had. And this is just over the last 20 minutes. Shorting the Swiss yen. Dimitri writes in, hey, do you see an inverted head and shoulder pattern in the dollar yen? I'm like, yep, I sure do. Here it is. Looking to short that at 154.60 if seen. Then Michael W jumps in and shows you what he's seeing as well. These are the types of conversations we have behind the scenes with traders from all over the world. Because Dimitri's in Europe, Michael's in New York. I'm just saying that if you don't have these kind of conversations with people 24 hours a day, you're missing out being in the Forex Analytics community. Because I'm just showing you the very tip of the iceberg or tip of the mushroom, however you want to look at it, at what is being seen inside our community. So make sure you're jumping in our community, because it's a lot more than just this little platform that you see here with all this great analysis and being able to read what Grega's Elliott wave analysis is on the Aussie dollar and the live squawk feed and the patterns in play. It's much more than that. It's inside our community. Ryan, I want to focus on your flow show this morning, because I know K-Man had to take off back to Belgium. He's handling some family stuff, so I'm assuming actually he is driving right at this very moment in time. But what jumped out for you in European trade today? What did you see that really had your attention today?
Nothing.
Come on, man. Give me something more than that.
It's been a real quiet one, but obviously we got a lot of focus on the yen, as you were talking about. We had another move under 153 overnight. I think we're in for a lot of what I call Newton's cradle. When you pull the ball from one end and let it go, and it pops the ball out the other end. So I think we do get significant selling, but then we also do get quite significant bounces as well. we're back up, getting up towards the high 153s again. So this is a big test. 152 is my level. I know you showed your chart and you had your trend line, but you got the trend line going up from April. You've also got the 38.2 fib at 152, pretty much exactly. Yeah, you'll see it there.
This is, and by the way, this is Ryan's analysis that he posted 4 hours ago, and you can read it, as it's pushed to your mobile device through the mobile app that we have on the Apple Store, Google
So you
Play
can
Store,
see
whatever.
that we had the prior low down right on into that 152 and that fib, and we got closer again there today. I think that level really is the key level for whether we are going to see a proper turn in the trend for the yen, i.e. yen strengthening. If we get through there, I think we're going on to 150, maybe even 149s and around that 50 retracement. If we bounce from here though, that might take some of the heat off, and then maybe we set up a bit of a range play between 152 and 155, something like that. But yeah, that's the focus. Obviously, we got that tap that happened over the F.A.C.E show. We were talking about it and just sitting there watching it go from 154.30s all the way down through 153. We had the currency guy in Japan, Mimura, saying that he's heard that there's a lot of speculation about whether they did a rate check, but he's not going to comment on anything like that. So we don't know if that was a rate check or not.
And that was pretty wild yesterday. Just so everybody could see, we were on air when that happened, right, Brian?
Yeah. I was sitting there calling it out. I was like, whoa, what's going on here? It went
right,
154.30, 153.90, 153.70, and then off it went.
It was right here, literally, guys. In case you missed it on yesterday's show, I'll go to the 5-minute chart. I didn't mean to interrupt there, Ryan, but this was happening. This is the strong jobs report. This was right after the jobs report, right? We were just like, what the hell's going on?
Yeah, it happened in seconds. But we've had not even sources noises saying it was a rate check. So it could have been someone trying to spoof it. It could have been sellers who have been caught out by this move down and just saw a big rally to spank it to try and get out some longs, dollar yen longs, obviously. So yeah, I think CPI. It'd be interesting to see what happens on CPI tomorrow. But if this climbs are back above 154, that's going to be interesting to see if the sellers come in and whack it again.
Yeah, and just we were doing this live yesterday on this show. I think I shorted dollar yen 3 different times yesterday successfully.
You got in above 154, didn't you? And I was waiting for 155, but in the end, I just had to jump in with some as well.
Yeah. I shorted a lot of it and multiple times. And again, I'm going to just go to our trades room, and this is I don't want to necessarily highlight exactly what I was doing, but I want to show you how many people were shorting the dollar yen at that point in time. You can see this is all yesterday, guys. This is all short dollar yen, closed dollar yen, shorted, closed it for 75 pips. K-Man shorting it. James is shorting it. Peter was shorting it. Dustin, I don't ever tell people to do what I do because we don't have a copy service. It's not relevant. And I think your timing is going to be off because it isn't your idea anyway. But it's more about respecting what somebody does. If I've been in the markets for 30 years, you know that I'm posting my stuff every single day and every single trade. And you have respect for what I do or what Ryan does. If Ryan says, hey, I'm long the S&P, and you're like, well, shit, I'm short. Maybe I should ask Ryan about what he's doing. That's the gist of our community, is being able to talk to somebody that is doing something that might be the same as you, or maybe it's opposite the trade that you're in, and you can talk to somebody about it. That is the gist of it all.
And it goes the other way as well. I might ask someone why they've got the opposing position rather than them asking me.
Oh yeah, of course. Absolutely. I have to say there's a lot of traders. Well, we've been trading with these guys for 10 years, and then some of them I've been with for over 20 years that are still in our chat rooms. that I've been talking to that I have a lot of respect for. And so when they are on one side of the market and I happen to be on the other, I do question what I'm doing. I ask them why, and then have a very, adult conversation with people about why they're positioned a certain way, because it is important to, so you're not in a echo chamber. Because one of the biggest issues that I find today, Ryan, and this is not necessarily with trading, is because of social media and because of the way Twitter and TikTok and YouTube and Facebook or Instagram, all their algorithms are written, you're in an echo chamber. So if I am looking for something, and my phone picks it up, which it does, it says, oh, I'm so bearish the dollar. All I'm going to get is bearish dollar shit coming on my stream, and it's really annoying that social media companies do this. Twitter, they're going to feed you whatever you want to know. So you're just going to get this self reinforcing echo chamber of whatever you're thinking. Whether it's politics, whether it's markets, it doesn't really matter. That's all social media is, and it's meant to do that. So if you want to get out of that echo chamber and actually have conversations, you should be in a community. All right, Ryan, we're about 13 minutes away from having Nick Lentz and also we're gonna have Jimmy Jude here, which I've never talked to either one of them. I've been following Jimmy for maybe 6 or 7 years, and then Nick from Trading Analytics, he jumped in our team chat and he's like, "Yeah, I'm a fanboy, self-admitted. I can't wait for Jimmy's interview." So it's going to be really great to have these guys here. But before we get to that, let's look ahead into what else is moving. Because right now, equities are not moving. We have equities just pinned to the highs. And I know it's frustrating. It's frustrating for everybody, guys. If you're a bear and you are just just a bear trying to come out of hibernation saying S&P's at 7,000, it can't go any higher. Let's not ignore the fact that the Fed is going to be cutting rates and we're just pegged up against the highs. When we're not pulling back, that's a risk that we're going to pop at least above the highs to probe what's up there. So when you're in a rising channel, which we have been for, since COVID, actually since you go back since 2018, we've been in this rising channel. Yes, we're at the top of the channel. Yes, we can press to new highs. Yes, we can stop anybody who's short out by putting us 200 or 300 handles above where we currently trade right now, just to get all shorts washed out. That can happen. Timing is everything when you're a bear, but also as a bull. Because if you're a bull and you're like, the Fed's cutting rates, why aren't markets going higher from here? You're probably equally as frustrating and getting stopped out on every time you buy new highs, you're getting stopped out below those lows. This is, without a shadow of a doubt, a very frustrating market, especially if you're trading equities. You have to be a stock picker. This is not the time, and probably the next several years are not going to be the time to be index traders. These are the times that you want to have laser focus on good stocks or specific stocks, especially if you're looking to trade on the short side of the market or on the long side. All right, this is very frustrating. I know something's going to dislodge us, whether it is to the upside or to the downside. Something's going to dislodge us, but we have been in this tight channel really since October of last year. So Ryan, what's going to dislodge the U.S. equity markets out of here? And I'm not talking just U.S. equities too. I mean, we do have, the Nikkei that's all-time highs. That continues to stretch its legs, and but a lot of European bourses are really kind of pegged at highs too, and not really going anywhere, but grinding higher. What's going to get us out of this malaise that you're seeing in equities?
Oh, that's a question. I don't know what does it, because nothing's done it in the last couple of weeks or whatever. But I think there's something important going to happen here. This 7K level. I'm getting the twitch for buying a break, maybe chucking in some buy stops. But I think it's important that the cash market breaks up. I don't know if that that SPX market you've got below in your watch list is the cash market one, the TVC one.
Oh, yeah, this is the here's a trading view cash market. There you go.
So, you stick a line at 7,000 and, we've just managed a 2-tick break above it. So that's, I think you've got to see the cash market going before you maybe think about a break. But if we keep hitting our head here, and I don't know why we're hitting our head here, I'm suspecting maybe there's some big options in play around this big level. But if we don't get through it, then you're going to find people giving up, and we'll probably get another steepish pullback. Whether it gets down to the same one as the last one, 67.30s or whatever, I'm not sure, but it should be pretty steep if we get that. And then if we come back to the 7K from that, I think that'll be the one that busts it.
Yeah, and I mean, there's so many reasons why we're stopped where we're at, but again, it is frustrating. And time is everything, and calls are everything. If you're a bull and you're like, oh, I'm buying some S&P calls. I mean, dude, you're getting bled to death, especially if you're trading options. Like if you're like, oh, it was the beginning of the year, you're like, I'm buying like, April 2026 calls. I mean, the time decay, it's bleeding you to death. And if you're a bear, it's the same thing. You're like, oh, beginning of the year, you're like, I'm buying, 6,000 S&P puts, that expire in April. And man, when we collapse, I'm going to make a fucking truckload of money. And your time decay is just killing you as well. I mean, this is what is killing traders, is the lack of volatility and the mismanagement of timing of trades. That's why you have to be really, really looking for breakpoints. And if you don't find if a breakpoint is triggered and you tend to get into the market, whether it is to the upside or the downside, if you're wrong quick, you need to be wrong quick and get out. It's okay to be wrong. It's not okay to stay wrong. And that is something you should take to the bank each and every trade. All right. And speaking of which, we're going to have some pretty good traders joining us in about 7 minutes. So I'm excited for that. Ryan, we do have weekly unemployment claims that are coming up. And I do think that could move the market. Remember last week we had a jump in claims, if you guys forgot, but remember that might have been very much weather related. So that's something to be paying attention to. But last week, let me just pull up the data, and I'll let you jump in. And we do. Oh, you know what else? We have a 30-year auction today. We have a lot of shit that's being slept by Treasury Secretary Bessent, best bond salesman in the world, largest bond salesman in the world, has got to sell 30-year paper for us today. So let's see if that gets done. But yeah, we last week we had 222,000 in claims, or no, 231. We're expecting 222,000 today. I don't know why that's giving us the runaround, but what are you thinking today as far as weekly unemployment claims, if anything, Ryan?
Probably it's going to be another dull one. It hasn't budged at all for probably going on 2 years now, I don't think. But a bit like the NFP, it only takes one big number to get the market moving. So anywhere sort of 50k either side, I don't think we budge. But if we get like a 300 print or a 100 print on that, then we should see a bit of a move. And if it's a good number, i.e. claims coming down and continuing claims coming down, that's going to add more fuel to the fire on the dollar.
Right. Hey, by the way, White House trade advisor Navarro says USMCA has significant flaws. Don't forget, he also told us that the jobs report was going to be that we should be bracing for a horrible number. So whatever he has to say, let's just not even pay attention to it. Matter of fact, we should probably just all be buying Mexican pesos and Canadian dollars, because it's probably just perfect the way it is. I'm joking. I'm being a little sarcastic here, but he was really off yesterday, wasn't he?
Yeah, was it him? Was it him?
It was both Navarro
was
and Hassett. It was both of them.
Yeah,
it was both
of them. Both of them. I think Lutnick got involved as well.
Yeah, and actually Bessent might have jumped in there and threw a foot in the fire as well. So yeah.
Yeah, I think they're all in. But again, I think the market, I think the headline writers spun up that story a bit. because the details were just talking more generally about the jobs market. But you know what the market's going to do? The market's going to market, and it got all a bit antsy about the jobs numbers.
Yeah, for sure. Yeah, and everybody's getting. I mean, we were all prepared for a weak number. I mean, but as I told you guys yesterday on this show, I was like, what's going to give us the bigger result and what's going to give us the bigger move, which did, was a strong jobs report. I mean, we got a big move in the dollar, but it just didn't last. That's the craziest thing, I think, Ryan, is that we saw this huge move in the dollar index and it just sputtered out. That was probably the most surprising thing to me. I as I showed you guys earlier via the trades room in Forex Analytix, I was obviously shorting the dollar yen into that rally, but I think it was surprising that we gave back all of the dollar gains. Yeah, I mean, here's the move, and then we gave it all back by the end.
If you look at the euro, the euro was looking pretty above 119. We couldn't get through 119.28.30 for some reason, but it was looking good. But it can't get back there now. We're now bumping ahead on it. So the market is definitely a little bit more nervous about piling into buying the euro versus the dollar, as we're seeing in some of the others. Though, if you look at Aussie dollar, that's still well up there.
Yeah, I mean, Aussie still looks great, and it's finding support where it should. And by the way, if you guys can't tell, I mean, we have like these two teal lines. These are your breakout points for the euro. If you didn't know that, you could just go back here to basic technical analysis from yesterday and see the teal lines. Those are your breakout points for the euro, and you should be very well aware of that. And it's good. I mean, for me as a trader, knowing where the market's going to move is most important. Like I don't have a crystal ball, although for those of you that do not know, I do have a magic 8 ball here, and it does tell me exactly what's going to happen in the market. If you guys don't have one of these, you should probably get one of these, like a magic 8 ball.
Can you ask it if my football team's going to get relegated, please?
Hold on. Fuck yeah. Oh, I mean, god damn, I didn't know that had that type of response on there. Sorry, Ryan. It is what it is, buddy. That sucks for you, man. Sorry. Hey, how are you going to watch games when you guys get relegated? Do you have to does everybody go to the pub and no one goes to a game anymore? Is that what happens?
You say that. It's actually what we did do the last time we went down. We used to meet up for the pub and think, we're playing Rotherham or someone. Let's not even bother going in the ground. Let's just sit outside in the pub.
Joking, not joking. Okay, all right, guys. We're gonna have we got a couple traders going to be joining us here in a minute. But what we got to do is we got to get prepared for the weekly unemployment claim. So I'm going to pull up data flash right here off of Forex Analytix. I'm going to pull that over. As you guys can see, I brought over 3 charts. We got the S&P to the left. We have the dollar index in the middle. We have 15, or we have the 10-year yields right there to the right. And we're going to be looking for that instant reaction. Let me pull this down just a little bit. And oh shit, I didn't mean to do that. Let me grab this back. Okay. Don't do that. Hold on. All right, here we go. Sorry, I got managing windows here. How much time we got, Ryan? We still have 30 seconds.
Yeah, 30 seconds.
We have 30 seconds. All right, guys. We're gonna be looking for this data as we are. Let me go ahead and find. Let's see if Jimmy Jude is here.
Yeah, they're both there.
They are. Do you want to bring them over?
James
Jude. James Jude. I'm gonna bring him over, and let me bring in Nick. Hey, look at that. I got Nick too. Okay, so hey, you guys gotta accept the promotions, please. All right, they're coming over. We'll bring them on here in just a second. Let's just get through this data, and let's see how the market reacts here. 2 seconds. Here we go. Weekly unemployment claims. What do we got, Ryan?
227 on the money.
227. You guys see it pop in here? Yeah, a little bit better.
Continued claims. 1.862, nothing to see there. Move along.
Yeah, revision was 1,000 off. Don't chase. Whatever you're doing, don't chase. Not right now. Not with this data. All right, guys. Well, then we're going to be stuck with our thumbs in our butts, trying to figure out what the equity markets are going to do today. And so, what what better day to bring in a couple of gentlemen that I'm gonna admit, as I said a little bit earlier, in case you guys missed my comments, you know, I've been following Jimmy Jude for, I want to probably say at least 5 years on Twitter, and have a lot of respect for him. I just recently started following Nick, you know, so I'm excited to have these two guys here because Ryan, you know, had a great idea the other day on bringing these two guys on, and we could talk a little bit of trader talk here. Good morning, gentlemen. How are you?
Good morning. How are you? Hi, Blake. Hi, Ryan.
Hey guys.
Good morning, everybody.
Nice to meet you guys in person, kind of, however you want to, you know, call this type of thing. Great to have you guys here. So let's start off really quick. I'm gonna talk a little bit about trading, but before I do that, I want you guys to introduce yourselves. So let's start with you, Nick. You're a guy that I recently just started following because you've been bantering with Ryan and Michael Brown and
Okay,
you know,
yeah.
Yeah. I hear you guys bantering all the time. I started following you, and I found you really quite a great follow to follow. So tell us about you.
Well, my name is Nick Lentz. In my previous life, I was a top-rated professional fighter. That's how I got into Twitter. That's how I got into stuff. And it's actually probably more crazy that I was a professional fighter and less so that I in finance. You know, I've always been a nerd. I've always been into quantitative finance, and my goal in fighting was always to sort of create my own hedge fund and get the money to invest into being able to do what I otherwise couldn't do because I was born into a family that just didn't have connections and was at the bottom of the economic ladder. So the only way for me to get there was to be an athlete, and I did that, and now that's how I got into markets, and that's why I'm here today.
That's awesome. You know, I can first of all, I can totally relate. You know, I grew up in Arizona, you know, and outside of New York or London or anything else, and like you kind of, well, grew up in a lower middle class family, and you know, had to, you know, fight my way to where I'm at and make those connections to do these things. So I really have a lot of respect for you, but I do have a lot of respect for you as a fighter. How UFC, I'm assuming.
Yeah, I was in the UFC for 12 years.
Wow. Okay, so have you seen the Smashing Machine? I'm sure you have.
No.
What?
No.
You haven't seen the movie The Smashing Machine with The Rock? That just came out. We watched it this weekend. That's why it's fresh in my mind. It's what's his name? Mark Kerr? Mark Kerr.
Yeah, Mark Kerr, yeah.
Mark Kerr, who lives actually, it's funny, at the very end, he's at a grocery store that's like that we used to go to. I'm like, holy cow, my kids and I are like, hey, we used to go to that grocery store right there. Anyway, great movie. But going back to you as a fighter, so how have you incorporated your life experiences into the markets?
Well, when it comes to like my fighting style and my trading style, they're very different, right? But the main thing that I've been able to learn through competing at such a high level and getting ranked in the top in the world at something is the ability to play to my strengths and then cover for my weaknesses. So one of the things the reason that I became friends with Jimmy is Jimmy has an exceptional feel for markets. And I always wanted to have that feel. I always wanted to be the guy that sees the ES level and then throws 50 ES at it, you know? But it was made painfully aware to me that I'm not that guy because I tried it and I just didn't like it. And I'm a system builder. I've been coding since I was a little kid. Again, like I couldn't afford a computer, so I had to build my own out of trash. And I've been able to build systematic systems to cover for that weakness of not being able to pull the trigger when I need to. So I have sophisticated algorithms. I have all kinds of stuff that enhances my abilities and then I'm able to play to my strengths. So when you're a professional fighter, you're the one that has to fight, but there's a gigantic team you have to build around you. And that's one of the benefits that I've been able to. So I've been able to reach out to people like Andy Constant, to some of my other mentors, to Jimmy, and I've been able to play the role of a mentee, I guess you could call it, and have mentors that were able to accelerate my learning curve and to play, and then allow me to play to my strengths. So that ability to be humble, to reach out, and at the same time be fiercely confident in yourself and not be labeled. Because obviously when someone looks at me, and I do the same thing, so I can't even blame them. When I see an athlete on the TV, I turn it off. You know what I mean? I'm like, I don't want to hear what this guy has to say about the market. And so I'm biased against myself. But
Yeah.
I know very well that I possess the skills and the trading acumen that it puts me at a high level. And that's why after I get to know people, they gain the respect. And so I didn't allow people to corner me into not being into the job I always wanted. So that's what I learned in the fight game.
That's pretty awesome. And it's cool that you built like, I'm not a systematic trader, by the way. I've always been, even when I, did prop trading out of New York, out of Greenwich with other traders. None of us were like systematic traders. We were like either in front of the computer or manually trading or not. But I've always had that desire to be like, all right, when I'm not around, or I need something to trigger when certain things happen. I want trades to go off, or at least be notified when they're going off. And that's what you do basically.
Yeah. I mean, almost all I'm a discretionary trader when it comes to actually trading. Like I make the trades myself, but I don't make a single trade without my systems telling me that it's acceptable. So like so I have just many systems built up over the years that are very accurate. I have long-term portfolio diversification systems. I have short-term trading models, and that, like I said, when it was my time to pull the trigger and ES came to my level or the yen came to my level, I consistently struggled because to me, I needed a reason. I needed some kind of confirmation, and I didn't have that feel for markets that I wanted to. I always wanted to have the feel that Jimmy has, but I didn't have it. So I had to build up for that weakness. And now that I have it, now when stuff comes to my level, man, I pull the trigger big. So
interesting. I'm gonna Nick.
Jimmy, can I?
Yeah. Please go ahead. Go ahead.
And bring Jimmy in. Welcome, Jimmy.
Yeah.
Just what Nick's talking about. Do you think that that's purely an experience thing? Because you're an old floor trader, I'm an old floor trader. Your systems are up here, over years and years and years and years and years. And I think it's great that I wouldn't say that Nick shortcutted that experience by building his system, because you obviously need a great mind to do that. But now, how long before Nick doesn't need the system? He's got it up there and doesn't need to look at his machines.
That's going to be, it'll be better, it'll be constantly improving, put it that way, with experience. But honestly, it probably took me 15 years before my sniffer was really started to dial in on stuff. And I started like the chart started to speak to me. I could click on any chart and be like, immediately have like a grasp of where it's going, what's going on, and I think there's a creative aspect to it too. It's not just, to be able to develop a feel like that, you have to be a somewhat of a creative person, not just, analytical. It's not just numbers. Markets are these organic beasts, and they all move in the same patterns, but they all move at different speeds. They all have different nuances. And when but it takes years of screen time to develop that, and to see those differences in the movements and the whole mosaic come together. Nick is, he's like right there. He really is. First of all, he has like this crazy appetite to learn and take whatever you give him and then just like run with it. A lot of stuff, I teach him, he's coming back to me with questions that I can't even answer afterwards because he's gone some other place and looked it up, so, but it's, it is such a process. My process was like, someone described me as like the Forrest Gump of trading, because I had been, I started in 94, which, in the Eurodollar, trading the front end of the yield curve. And that was, from 94 to, 2000, that was the place.
That's a hell of a place to get dumped. That's a hell of a place to get dumped out right at the beginning of your career too.
Yeah, it was actually really scary, to tell you the truth. I chose options because I had seen too many future traders go in the pit and fail immediately and back in a clerk coat in 3 months, and I saw there was more of a process to get into the options pit, but once you were there, you had a more of a chance to stay a trader in this, but it was hard. It was, that pit was super sophisticated. It had, everyone in there was from MIT or Ivy League. They were all off the charts, fucking brilliant, tough as nails too, like everyone was smarter than me, and most guys could kick the shit out of me too, which was, like, and believe me, that was on the line every day. Like you crossed the wrong line with the wrong guy, you were fist fighting in the middle of the pit. So and it was embarrassing if you lost. So there are so many ways to be embarrassed in that pit, either mentally or physically, that it was that was tough. But I tell you, if you could cut it there in that pit, you knew you had the confidence where you were like, holy shit, I'm going up against the best of the best here. I mean, I stood next to Don Wilson, the owner of DRW, for 5 years, making markets next to him, trading, against him, not really trading against him. I would defer to him, of course, but just the competitive nature of running up against these guys, Dave Stein was in that pit. He graduated like #1 Harvard, and then graduated #1 Harvard Law, and then went into the pit to trade and made like gazillions trading and never used his law degree or anything, but you had beasts like that, which, you're standing next to that guy. I'm thinking, geez, I got out of UConn with like, 2.9. Like, oh, fuck. But you know what? They didn't have my creativity. There were some components to the game that I had that they didn't have.
Yeah.
And when I say Forrest Gump is so I was there for a lot of moments. I was there for I was in that pit for long-term capital's blow up, and long-term capital came in and tried to save their ass through the Eurodollar options pit at the end. So I got to see all that. I traded through 9/11 in that pit, which was another one. And then when I went electronic, all of a sudden, because I saw, I knew I had to transition at some point out of the pits. I saw the writing on the wall.
Yeah, decimalization was the death of all of us at that time.
Right. And I mean, when I first got into the pit, it was like full ticks. They hadn't gone to quarters or eighths or, full ticks. Markets were 2 tick wide, it was everything you got to hit on. You were either making a little bit of money or a lot of money.
Scalper's paradise. It was.
Dude, the edge was ridiculous. It
was crazy. Yeah.
But obviously that had to go away. Because there had to. It was inefficient. So when I went over to electronic, then I started to learn the electronic and everything. And I had, and Nick and I had just talked about this. I had an opportunity to go back into the pits for Katrina. My company asked me to go to the natural gas pit to go help trade Katrina because we had a bunch of natural gas traders there. So then I got to trade Katrina, and right after Katrina, Brian Hunter blew out in that pit in natural gas. So I watched a hedge fund guy get dismantled for $8 billion right in front of me, which was an amazing experience. Again, all these experiences all added up. And, I was probably marginal a lot of in the beginning, a lot of the ways. I mean, the edge really helped me in the pit to make money. But it wasn't until, I went through all that stuff and a lot of pain involved, some success, I blew out a couple times, fired, kicked out of the building type of things, but all that added up. And, it's kind of like that. That meme where the guy's chipping away and there's diamonds right there. And he's like, I felt like that guy where I was 15 years into the career, I made, I had done some well, but I'm like, fuck this, I'm not quitting, and I kept going and it did. At some point, all the doors start opening up mentally for you, and you really start seeing it.
You know what it is?
Sorry,
real quick, I want to just jump in, and you guys probably, Ryan, you should probably, talk about your experiences on the live floor. At least you're a big dude, Jimmy's at least that guy's big, Ryan's a big guy. But I do want to point out, if you guys haven't noticed, Jimmy behind him, he's got a surfboard. Right. He's like, I've got talents that others don't. If you guys don't notice behind me, I've got a skateboard. I'm, I was a sponsored pro-am skater in the 80s, when I was a
That's awesome.
teenager.
I didn't know that.
But yeah, and it was back when I was a teenager before I even could drive. So, but the thing is, some of the traders, like back in 90, I guess it was 97, one of the best traders that I knew, he was the Mesa, Arizona orchestra conductor. He understood rhythms in the market, just like you understand rhythms in the ocean, as I understand pacing when I'm skateboarding. It's all about rhythms. And so we have this certain edge that a lot of people don't, because they're so mechanical, so and even you could probably extract that from Nick in the way that his fighting style might be, which by the way, Nick, I've never seen any of your videos, so I'm not sure. But the way that the way that you maybe, dodge certain, attacks or whatever, it's a rhythm, and the markets carry that. And if you can pick up on that, I think it'll carry you a long way. And I'm talking to our viewers at home. I'm sorry, Ryan, you wanted to jump in and ask Jimmy something.
Yeah, sorry. We seem to follow pretty much the same path, same time frames of going into trading, the pits and whatever. How did you find that transition away from the pit to electronic trading? Because for a lot of traders, they couldn't do it. They couldn't do it because they lost all the information. They lost who's on the offer there, who's on the bid there, what are these firms doing. You lose all that inside information and knowledge and just talking to people. So how then you go in and you're sitting in front of a computer, maybe at home, you got no one around you. Yeah, absolutely no one around you. You've lost all that. How did you find that transition?
Well, the electronic firm I went to did have like an amazing education program. So I had mentors, I got to talk to people, but that first year off the floor is going to be frustrating no matter what. You want to be able to see it so bad. And, you just want to like dump their information in your head and like just spit it out and just be there. But it just doesn't work that way. And I did notice that I had a little bit of edge coming from an option pit and being a market maker, where I didn't have like a notion of how this was going to work out for me when I started, because then I went into futures trading and I could trade anything, Forex, SPOOs, yield curve, whatever I wanted. It was at my fingertips in the beginning. And I noticed that the S&P traders that were coming off the floor, they would come off the floor hot and they would trade like 60 times a day, when in reality, I mean, this guy, our mentors were preaching like, dude, you should be trading like, 3, maybe 4 is a lot, like a lot of times I'll trade once, you got to wait for your set, and these guys will come off the floor and, for the first time, they've just, the world's their oyster, and they're like, shit, I don't even have to get a broker's attention. I can just, every impulse I can just click on, and I got to watch them fail in that manner. And because they were in my room, in my electronic room, and they were cursing, they were floor guys, and they're like, fuck, you could hear them screaming all day long. And I could hear their coaches saying like, Jesus Christ, dude, you traded 70 fucking times today. So you thought you were going to be right 70 fucking times? Like, are you crazy? Plus it's super expensive to like trade that much too.
Back then, oh my God, the commissions, that's how we made our killing. It's like just what you're charging people.
Right. Yeah. The guy was like $1,800 in the hole, to start the day on commissions. And then he, loses like, and then they'd be like, well, I only lost $200. It's like, yeah, well, guess what?
You're
on the road to the door out of here already,
Right.
So that I was a little bit slower than them. I didn't have that speed and over trading issue, but I just couldn't see it. And I was next to some guys that, friends of mine that had gone electronic a couple years prior to me that brought me over with them, and they could see it and they were like crushing it. And they're like, they're like, oh, look at this spot. Look at how juicy this is and that. And I'm like, what the fuck? I don't see it, like Jesus. And then slowly there, a couple setups started to like make sense to me and be in my wheelhouse. So I'd wait for, a couple setups, and then I kept adding 1 or 2 setups to that. And slowly crawled my way into seeing it more and more, but it's a process. It's screen time. It takes years, you know. I don't think I didn't see it in that first year or two, you know. I really didn't. I saw
Try
some
10.
stuff. Right, you know, I could
Try
see the
10.
obvious shit, like, you know, I could throw up, you know, a trend line, I could do, you know, but it's that like third eye stuff that you develop years later where you're like,
Yeah.
this trend line's fucked, or this, you know what I mean? This setup, everyone's going to see this setup and they're going to get fucked. And that's when the best setups come, when, you know, you get the overloaded boat, everyone's thinking one way and you're an experienced trader, you're like, nope. And you go the other, and
Yeah.
Positioning is key. Hey, I want to turn this. I want to go back to Nick really quick. Nick, you've got these algorithms, and this is one thing that I've always had this like curiosity about because I don't do it. I don't build them, but I've always wanted to. How often do you tweak them based on current market environments, and or are there certain strategies you only incorporate during certain environments that you see? How's that work? Because you know, I mean, we're it's like one day certain correlations are working, the other day certain themes are driving the markets, then a certain day, you know, the focus is here and not here. So how do you change when you're algorithmic, or you're making algorithms, if you will?
Okay, so this is one of the most important things when it comes to systematic modeling. And when you make systematic models, the beauty is always in the simplicity of it. And so the reason that people make these errors, they make these extensive back tests, but really they just put in, they're just tweaking the data to make it look good. So you have this just amazing back test, and then you forward test it and you do it live and it's absolute dog shit, right?
Right.
And so what you do is you put all this testing in and you make this beautiful model. Then you try to dumb it down to the most basic principles of why you thought that it worked, and then you test that. So you're not looking to make this like super system. You're actually always trying to make the system dumber. You're always trying to pull you're trying to not overfit everything and to make it work in most situations. So you can make this beautiful model that works in bull markets, but then all of a sudden there's no bull market, and now your model is dog shit. You gave away all your money, right?
Yeah.
So the main thing when it comes to over tweaking, you have to make the model and then you have to live with it, and you have to live with it for a long time. And you have to accept that through your back testing that you're going to have down months, that you're going to have up months, and you're going to have this P&L curve that doesn't go straight up. And so if you back test something and it looks absolutely amazing, there's 100% chance it's not going to work, right? And very often when we make models, we'll make 5 different ones and we'll end up picking the one that's maybe in the middle, right? Because we know that it's not going to be great. We know that we don't want to be the worst one. And so that's what you do. The enemy of trading, the enemy of systematic modeling is overfitting. And so the main thing that you never want to do is you don't want to overfit. And then the last thing that it's from the prior discussion, but Jimmy was saying like, oh, I could develop a feel. I could do this. One of the mistakes people make, because I was a high-level fighter and I also was one of the top coaches of high-level fighters. One of the mistakes people do is they try to be something they're not, and they play to their weaknesses over playing to their strengths. So when you have a strength, that's who you are. Like I was a wrestler, I was a grappler, and I wasn't a striker. I got my striking up to world class, but it followed my other thing. My other stuff dragged it up. So when you make these models, if that's what you're good at, you should focus on that, and then you should build a team around you to make up for your weaknesses. So pull up your weaknesses, but don't try to be something that you're not. You know.
Okay, that's interesting. Okay, well, thank you for that. You know, we're closing in on the end of our show. So I'm gonna open it back up to Ryan and see if Ryan has any closing questions for you guys. But before I do, if you guys are really enjoying what you're seeing here, make sure you guys follow Nick and follow Jimmy. Follow them on Twitter or on X. You know, and follow their work. They're really great. But Ryan, what any last minute questions that you might have for these two gentlemen?
Yeah, I had a last minute one for Jimmy and Nick if he wants to come in as well. I watched your interview a week or so ago, the one that you two guys did, and you made a good point, Jimmy, about how, you know, when you're in the zone, when you got that trade and you got that conviction, you really need to push it. But when I was watching that, I was thinking to myself, maybe a few traders, inexperienced traders, are going to watch that and think, I'm going to try and bully the market. You know, having that strength to say, yeah, I'm going to hit this is not you trying to bully the market and say, I'm right, I'm going to smash you. It's about saying, I think I've got high conviction in this trade. I'm going to make it count, whether that's hitting it hard or sitting on it for a long time. So I just wanted to bring that up. How often do you see people thinking they can beat the market? Like you, Nick, you step in the ring and you probably go in your head, I'm going to smash that guy to pieces. But you can't do that with the market. You can't do that with the market. You have to know what you're up against.
Well, you know what? I've failed so many times in my career. At this point, I'm schizophrenic. So I never like go into the market where I'm like, oh, I'm going to smash this motherfucker. I go in the market like, oh, Jesus. Okay, here we go. You know, this is my fucking spot. I'm laying it on the line, but you know, not, you know, in a confident way of this is my setup. This is my wheelhouse. Everything's aligning here, but not in a confident way of like, I'm going to crush these motherfuckers in front of me. You know, like I respect the market in that too much. And I've had too many, you know, I have too many wounds on the inside of my stomach wall to, you know, ever think that I could like bully or, you know, every time I enter the market, I'm immediately like, all right, how am I wrong? How's this going to fuck me? What's going on? You know, and that's my default. Not, you know, it takes confidence to get in there on the setup, but then I get, you know, then I'm more schizophrenic than I am, you know, like, come on, motherfuckers. You know, because, you know, the market is a soulless bitch, you know, it doesn't care about you. It doesn't care about your size. It doesn't care about your setup, you know, it'll crush you either way. So, and that's, you know, that's from years of this too, you know, and taking it.
And
yeah,
Jimmy, you could say that you got a hernia, you got a few hernias from the market inside your stomach walls, right?
Yeah, I would. Yeah, and basically, I'm just saying, like, I would never suggest the attitude of like that's the confidence. That's not the confidence I'm talking about. Like, you know, I'm right. I'm, you know, here I am versus the market. That's not the confidence. The confidence is like, I'm confident in my knowledge. I'm confident in what I've learned up to this point. I'm confident in everything I'm seeing is lining up and my knowledge base here. That's what I'm confident in. And that's why I'm doing 50 instead of 2, you know, type of thing.
And a good transition is when you talk about fighting, you said, hey, I think in fighting, I'm going to go smash that guy. Well, when I faced title contention guys where we're talking about #1 fighters in the world. The idea that I could look across that cage and see a guy there and say, oh, I'm just going to smash him is stupid. You know what I mean? I had to go in there and systematically beat that person. I had to get past their defenses. I had to wear on them. I had to outcondition them. The idea that I could just run in there and smash the guy is stupid because that guy's the best in the world. You know what I mean? And a perfect example of
that wasn't what I meant, but I meant
no.
I'm gonna that winning attitude. I'm gonna go in there and win.
I understand completely, but to win in the market, you have to accept that you're going to lose. You have to accept that you can't play big. You have to accept that risk management is the #1 thing that you need to worry about. And then, but I do have a perfect example of this. Is yesterday, we as a team, me and Jimmy, we bought essentially kind of the low in Bitcoin, and yesterday when it was pulling back, I'm like, oh, I don't know about this, man. I fucking hate this Bitcoin. Like, we should sell it. And Jimmy's like, bro, like, it's okay. Like, calm down, Nick. Let's go. And then we also bought some software stocks. And then Jimmy came in the message and he's like, oh man, these software stocks look like shit. Like, well, we should sell it. And I'm like, bro, chill out. Like, it's fine. You know, like, we're going to be fine. And so the idea that like, we're just swinging big, like we're constantly talking to each other. We constantly have this team, you know, like atmosphere. And we both had like that's how you build that risk sensitive thing, right? You have someone to talk to, you have other people. And if you think you're going to come in the trading game and do this by yourself and go against the smartest, most technical people in the world with the best computers, the best informational edges. If you think you're going to come in here and you're going to do it by yourself because you're looking at trend lines or you clicked on a few things or you learned in a seminar, you need a team of people. You need a team of people. You need to be around smart people who have done what you want to do, and then you got to take it from there.
Damn, amen, brother. All right, well, guys, I'm gonna say it has been wonderful having you both here. I'd like to have each one of you separately, but I've had so much fun having you both here at the same time, and with Ryan as well. I think we should do this again. What do you guys think?
Yeah, let's do it again. And yeah, we didn't even really get to talk markets, so let's do this again and talk some markets.
And you know, Jimmy, I've been trying to nail you down for a couple of years. I'm glad we finally got a chance to do this. And so
I was always afraid of the 8:30 start time, dude. To tell you the truth, I usually need a cocktail to get through these things. You know, they give me anxiety.
Dude, you did just great. You did great with just your cup of coffee that was spiked. It's okay. You did good. But no, gentlemen, Nick, Jimmy, what's the best way? What are your handles so you can just tell everybody best way to follow you guys?
Jimmy Jude 13. I'm sorry.
And
Jimmy
13.
No, Jimmy Jude 13, and mine's at Nick Lentz at NIKLENTZ.
By the way, before we go, I got to show you this.
And just so you know, Nick, my youngest son. Oh, look at that old school! You even got the rails on it.
Yeah, and the bird. Remember the bird?
If we're showing old things, hang on.
You got the truck guards and everything. No, that is hilarious. Oh my God, that's some old school stuff. There we go.
Oh, look at that,
dude! As I walked off the last day on the floor, still got the trading card.
Good jackets.
That's awesome. You know, that's an old picture because he actually has hair.
Not much,
dude. That is not even you.
I want to hear some stories too from the London exchanges. I heard you guys were complete animals over there.
Oh yeah, we need a couple of hours for that.
Yeah,
for sure. All right, let's do this again.
Yeah,
let's do this again. You guys are phenomenal. Make sure all of our listeners, make sure you're following these two gentlemen. I appreciate the banter, especially when we're on X. And I want to thank you both for being here, and obviously my colleague Ryan, thanks for being here as well. But you guys have a great day. Good luck for CPI tomorrow, and thank you, gentlemen, so much for being here.
Thank you for having us.
We will do this again.
Very nice.
Talk to you later.
Bye.
Bye, guys. All right, thank you, everybody. We'll catch you tomorrow. Remember, live for CPI. Thanks, Ryan. See you later, buddy.